Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. We've spoken to a lot of fintechs on this podcast, and when it comes to buy now, pay later, a lot of companies are trying to carve out their own niche in a crowded sector. But today's guest is a little different. While they do offer instalment payments, instead of going up against some of the new digital giants, MoneyMe is using technology and AI to take on some more traditional opponents, the big banks, in consumer lending. MoneyMe is listed on the ASX with a market cap in the range of 350 to 400 million. Clayton Howes is the founder of MoneyMe and my guest this morning. Clayton, welcome to Fear and Greed.
Thanks for having me.
How did MoneyMe come about? Where's it come from?
When I founded it in 2013, there were issues in the obvious financial services sector. We're having a digital generation of consumer shifting to online. They were thinking about how they, transact with efficiency, and in the financial services sector, we're still seeing people queuing up at banks for transactional purposes, and as opposed to having an online, efficient, ready-to-go model.
So why did you go consumer lending, though? I'm just interested in that.
It's all about data for us. So where I saw the gap with the banks, it was their ability to provide services that were actually appealing to a new generation.
Yeah.
The new generation wanted trust, they wanted flexibility, freedom, they wanted it at their fingertips. We call them the Generation Now people.
Yeah.
Now, why consumer is with many interactions, we get to learn more about this customer. We get to predict risk better. And what I saw in Australia is there's a gap in the ability to have a finance brand that's likable, trusted.
Yep.
And for consumers, having my experience in the past, having worked at Vodafone, I loved appealing to the mass market consumer play. I thought the power of consumers here in Australia deserved better. I think the consumers has an opportunity for us to have a much longer lifetime value with them. So the lifetime value, when we think about our MoneyMe customer, we traverse across that age spectrum, the earlier to credit entry consumer, all the way through to the homeowner.
Yeah.
And so what MoneyMe's done, and it's done quite differently, is been able to create products, really cool products for this modern generation that allows them to start with MoneyMe at an earlier stage. So it might be a small personal loan or a credit card, what we call freestyle. Now the modern credit card, not the old clunky bank one, all the way through to property sector driven products, larger ticket items. And then there's autopay.
Okay, so it's interesting, MoneyMe. So I totally agree. The banks sort of have that sector of the market. Then down the other spectrum, you've got the very expensive lenders, and I was going to say payday lenders. I don't know if that's quite the right term or not, but you want to stay away from those as much as you're possible. MoneyMe is sort of in that middle, trying to appeal to younger generation, credible consumer finance without having to go to really, really high interest rate people.
Absolutely. What's really interesting about MoneyMe, and it's leading this generational change, it's making things more efficient, but it's not adding the price tag to it. In fact, it's actually making the price tag much more affordable for consumers. It's making credit fair. We've got a risk-adjusted pricing model, and this risk-adjusted pricing model looks beyond the traditional credit bureau scores. It goes into understanding the customer's financial habits. So we're taking a lot of data, interrogating it, and all in real time, by the way, and understanding the consumer's financial habits and matching a product that suits them. And what we've then been able to do is provide our service to across that spectrum of borrowers, the spectrum of borrowers with good financial behavioral patterns. And we were able to do it really, really quickly. So what meets the eye with us being able to provide a fast transactional service, we're doing way more than what meets the eye. We're looking for consistency and patterns that enables us to go with that consumer across their financial journey. And in turn, now that we've established a bank warehouse facility, our prices are actually cheaper than the banks on the main.
Okay, so you've got the backing of someone big, a big organisation, which is providing you warehouse financing, is that right? And so what you're lending out is competitive with the banks?
When we established our major bank warehouse funding, that is a massive growth catalyst for us.
Yeah.
But with growth and scale, we get to offer cheaper, affordable pricing. And we in turn have created pricing across our products, our personal loan product, our freestyle credit product, our autopay product that absolutely competes directly with the banks on pricing. And in many parts, we beat the bank on pricing. So not only are we faster, more efficient, likable, but we come with a fantastic price tag too for consumers.
Okay.
And so it's a win-win for everyone. The bank gets a bigger wholesale funding structure, so they get to lend out a whole lot of money to us. They can do it more efficiently than them. We don't have bank branches. Our digital ways of servicing customers creates cheaper opportunities for us to build out scale. It creates opportunities for us to give customers more affordable pricing. And the banks like that, and the banks are supporting us.
Yeah, I mean, Westpac provides warehousing facility, is that correct?
Yeah, that's right.
Yeah, I mean, and they've done something similar. Well, they're white labelling products for Afterpay. It's interesting how, particularly in Westpac's case, they are quite happy to go into the white labelling side of the business and allow someone else like MoneyMe to do a lot of the customer transactions.
It's interesting. I think we can see progress happening from our major banks where they're supporting infrastructures like MoneyMe that's being able to use efficiencies and high automation and the ability to be agile.
Yeah.
Things that they struggle to have and things they know that they're going to really struggle as the consumer pace and demand continues to put strain on their business. The ability for them to support businesses like Afterpay and MoneyMe has been fantastic. It's good for the Australian economy as well.
Yeah, more competition, absolutely. Stay with me, Clayton. We'll be back in a minute. My guest this morning is Clayton Howes, founder of MoneyMe. So who's your typical customer?
So our customer is really interesting. We've got a diverse customer base, and we see the customer from the earlier ages of their credit life cycle. So probably slightly past the Afterpay stage, but all the way through to their homeowner stage. And that's all done by design for us. We created a series of products, and these products are what really differentiates us from the other challenger lenders in Australia. We're able to offer them a personal loan for a particular purpose. We're able to offer them a credit card that's more an ongoing habitual credit solution for them, all the way through to property managed expenses. For example, List Ready. Homeowners that are selling their property, there's some expenses that go into it, and we created a product specifically for them, distributed by real estate agents, which is incredibly efficient. We're able to offer them a solution to do up their house and sell it for a better outcome. Now, that's a really interesting customer.
So once you have a customer like that, though, and they know about you, suddenly you're available to them for the next stage of their life cycle.
And that's exactly the strategy for MoneyMe.
Yep.
We want to have a much longer lasting relationship with our customers. The banks have got a great relationship, long relationships with customers.
Yep.
If you think about Afterpay, it's phenomenal. But there's a point in time where it doesn't really make sense for you in some of your...
Yeah, as you become wealthier and that you don't need to pay in installments,
you might
basically.
not need it. That's right. But MoneyMe's plan is to traverse across the lifetime with that customer. And so having all these diversified products not only creates a more robust lending base, but it creates more opportunities to stay with this customer. Already MoneyMe's got 39% of our customers have at least had 2 products with us.
Oh, wow.
So the model is really working. So we're far beyond having a personal loan digital model. We've got a personal loan credit card and all these other types of models that's purely designed to keep the customer's interest and be continuously relevant to them.
So what's your channel to market? You just gave a great example of where real estate agents can introduce you to people who might need $10,000 to get through that whole process of buying their new home. What is your channel? Is it digital marketing? Is it using third parties like real estates? How does it work?
Yeah, we are pretty unique. In Australia, what we cracked was that direct-to-customer strategy. So we wanted to present our proposition to customers directly, and that was through social media, YouTube, Instagram, Facebook, distribution of ads programmatically. We had a really strong SEO and SEM strategies, and 92% of the customers that we've onboarded to date have been through those direct-to-customer distribution strategies.
Wow.
Then we've transitioned, and we're adding this new distribution model that we've seen Afterpay and others do incredibly well with, and that's distribute their product through other businesses.
Yep.
So our new business to business to customer strategy is unfolding incredibly well. For example, using real estate agents to distribute our List Ready product. We introduced MoneyMe Plus, and that's for the retailer. The retailer that's enjoyed the experience by distributing an Afterpay product for their customers to get more sales. We've done that by having a product that sits above the Afterpay value for the larger ticket items, and that's working incredibly well for us. We only just launched that last year, and we've got a stack of retailers signing up. And then there's that game changer one, which was AutoPay. We're distributing it through dealers. And in the same vein, dealers are using AutoPay because they're creating more sales for their business. Incredible opportunity for us to distribute through that B2B2C channel. And so as we grow, what we get more effective with is our marketing costs get more effective, our wholesale costs get more effective for us, and we just get to be in more places more quickly with more products for customers.
I mean, one thing that you are doing that Afterpay's not doing and Zipco's not doing, and most of the buy now, pay later guys aren't doing, you're actually making money. Now, congratulations on that. But of course, with Afterpay and Zipco, they're spending huge amounts of money marketing, particularly into the US, to build their businesses. So it's not even a criticism of them for not making money at this point. Why is it that you are making money? Is your marketing spend proportionately not as big, or you don't need to? I'm just interested that most of your competitors aren't making money, but you are.
It's really interesting. We built a model that was designed to be a growth and profit business. Now, where the secret in the making of this business has become is all about efficiencies.
Yeah.
When you acquire a customer and you have multiple products for them and your cost base is highly automated, the economics actually are quite simple for us. Our cost of borrowing money is cheap. The ability for us to distribute our product is getting cheaper. The ability for us to manage our operations with scale using automation is creating incredible operating leverage. So those fundamentals are the key ingredient. But I think one of the major important differences for us is that as we've grown with scale, we're creating value proposition for our customers that's creating longer lifetime revenue value. So if we take the end of this year, we've got $98 million of revenue that's already contracted for us. So having customers with a payment arrangement that's for about, say, 2 or 3 years, that's contracted revenue that we can start building and banking really early. So even without originations into this financial year, we've already got $50 million of contracted revenue. And so when we build out this business, the momentum just gets bigger. We don't have to chase every single growth opportunity. We're creating opportunity, and that momentum is compounding for us.
Clayton, thank you for talking to Fear and Greed.
Outstanding. Thanks very much, Sean.
That was Clayton Howes, founder of MoneyMe. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.